Hello, everybody, and welcome to today's midweek update. Plenty to talk about today. We've got a pullback that happened yesterday. We have a bounce back that is happening right as we speak. We're seeing that across every single index, and man, there's a bunch of stuff that has bounced. So let's hop on over to the charts and take a look at what is going on today. Now, here is a look at the daily time frames. This is the main spot that I always like to start off with. I like to take a look at each of the major indexes. We have the S&P 500, we have the Nasdaq, the Russell 2000, the New York Stock Exchange, the Dow, and for good measure, we have the IBD 50. Now, the IBD 50 is just simply an ETF that tracks the growth stocks, the ones that tend to appear in Investors Business Daily, in case if you're not familiar with that. So what are we seeing here? Uptrends, uptrends across the board. We saw a pullback yesterday, a very brief pullback. We saw a pullback on all the indexes, just kind of touching the 5 EMA, even over here on the Russell. And I want to focus on the Russell because the Russell's been a huge theme for us. Why is it such a huge theme? Well, it ran 8% last week. That's a pretty good theme. But also, if we zoom out, and I'm not even going to get into the politics here, but if we zoom out and take a look at this, the Russell 2000 broke out of a 2-year, 3-year consolidation just last week. And so with such a sharp move up, right? 8% in a week. This is an index, not a stock. And with such a sharp move up, it should be pulling back. That's what happened yesterday. So when we get a sharp pullback like we did yesterday, seeing a quick bounce back is exactly what you want to see. That's what my good friend Mark Minervini calls tennis ball action. You know, where you have a tennis ball, you drop it on the floor, it bounces right back. That's what's happening right here on the Russell. So that's a sign that weakness is being bought. That's exactly what you want to see. And it's not just on the major indexes, too. If it were just the major indexes, that would be one thing, but it's not. If we come over here and we take a look at all the stocks that we're setting up this week, right? I keep a weekend watch list. And this is in, let me move my face out of the way so you can see the rest of it over here. We'll start at the top, right? Start at the top. I have it sorted from least to greatest. So right at the top, we've got IAG that was setting up. That one didn't do so great. ARM is pulling back. Okay, so there's some setups that broke out, or in many cases so far didn't break out, just fell apart. And one of the things that I like to pay attention to, right? So for those of you that are into getting into the details with your stocks, one of the things that I like to look at is what groups are moving and how, especially the ones that I have on my setup list, because I'm not going to trade all the stocks on here. There's 60 names here. I'm not going to trade all of them, but I do want to know how they're behaving throughout the week, because that's going to give me some really great insights into which groups and sectors are performing well and which ones are not. That way I know where I want to go and what I want to avoid. And that's what can help me too. If that's helpful to you, type into the chat, let me know. We've got a bunch of people that are hopped on here already. Let's continue to work through this. So we had 2 from the mining group. We've got some semiconductors that are pulling back. But for the most part, even with these pullbacks, they're not bad. Most of them are consolidations. Then we start to get into the ones that have pushed higher, right? And those are coming up right here. We're starting to see some digestion in some of these names. Some of them are starting to push a little bit higher, like Allstate, like UWM. That's a leveraged ETF of the Russell. There's TNA. That's another leveraged ETF of the Russell. CALM. This one is in the food products group. And so as you start to flip through the group, you can start to see the performance for the group. And it's also giving me a much better sense of how the market is treating setups, the types of stocks that I'm interested in, as I just simply flip through this list. And this is how you could do it too, right? Just flip through the names on your watch list in this way, have it sorted just from least to greatest, and see how the setups are behaving, which groups are the ones that are performing. You could have it glancing over here. You could look at the heat map down here. That's why there's this heat map. And so I could instantly see that, wow, most of them are doing pretty well. The ones that aren't, right? Materials, metals and mining, all of them are in the red. Same thing with real estate, right? Those ones are in the red too, a little bit less. But for the most part, things are doing well. For the most part, we've got some really strong names heating up, right? Like on reported earnings this week, it's up 5% already for the week. In healthcare, NTRA is up 23% and climbing. So we could see that, and we could see the chart right here. I think that it's a great way to get a real-time feel of the market. And by doing this, we can filter out 99% of the noise out there. Because if we're tuned into the news or social media or waiting for the latest guru to tell us what to do, that's where a lot of the noise comes in. But if we can go to the market directly, learn how to read it ourselves, then we have a much better footing to stand on. And we don't need to be distracted by other people's opinions, no matter where they come from. So as we go through this, let me know if you have any questions on any of it. Go ahead, type into the chat. Let us know that you're out there. Let us know that you are alive. And let's keep it going here. All right. So what else is on the docket for today? Well, like I mentioned at the start, the market had pulled back yesterday. We're getting a little bit of a rebound today. Here are some of the stocks that I'm still holding, and we could take a brief look at these. So still in DraftKings. DraftKings had a huge move after earnings. It's now consolidating just above, just around its recent high right here, and just above prior resistance from September. When we see moves like this is great. This is exactly what you want to see right after price breaks out. You want to see it digest and digest in a healthy way. Price got above resistance and it's pausing. It's digesting the move. That's telling us that there's not a ton of people out there that are looking to sell this off, right? Because there people that bought down here, right? All these people, you see that hefty volume, all those people, they're already up 16%. They could make a quick buck and exit. For the most part, they're not. How do you know that? Because price is stabilizing. Minis Bub, can you briefly run us through the basic methodology of your setups? Sure. We'll get to that in a moment. I just want to make sure that we get through the general analysis and feel of where we're at in the market right now. Pretty close to the end of it. There's always three lenses that I look at for the market. I'm just seeing, do I have the paper here? Yes, I do. All right. So hopefully you guys remember this from last week. I'll zoom in on it. Hopefully you remember this from last week. we have the general market, which we just took a look at least on the daily time frames. I go a bit deeper with our research members and with our group coaching members. And for those of you that are interested in that, I will post the link to our research program. You could get a free 2-week trial to our research program. That's available to everybody. I just put it into the chat. Just go to that link in the chat and you'll be able to take a free 2-week trial to our research program. But the way that I analyze the market every single day is to take a look at the market through these 3 lenses: the general market, all 5 major indexes. I look at them not just on daily timeframes, but on weekly timeframes and monthly timeframes too. So that way I know where we're at in the broader trend. And also, is the market all trending in one direction, or is it getting a little choppy? Because when it gets choppy, our relation to the market will get a little bit choppy, and that tells us, okay, do we probably should be stepping on the brakes at least a little bit, at least with new trades that we're going to put on, because if the market is getting choppy, then it's less likely for us to start to make money in that kind of environment. It's not where we want to abandon ship per se, but it is where we want to just hold. Then we have your system. What's your system? That's the stocks. We were just looking at the stocks, right? When we were taking a look at Deep View and going through the watch list, those are the stocks. For me, that's what's telling me that, yeah, you know what? It's still a very hot market. Personally, I think that we're in the very early innings of a new cycle. But by seeing the stocks that I'm interested in setting up, breaking out, continue to perform well, having constructive pullbacks where you might be even able to add, that's something that's telling me that it's a good environment for my system. Then I take a look at the personal performance, and let's take a look at some of the stocks that I'm in right now, and you be the judge of if I should be a little bit more conservative or a little bit more aggressive here. Now, I have a few different positions on. I have Reddit. Reddit is my biggest winner right now. It's up close to 100%. I bought it back here on October the 4th. I've had a couple of scale outs along the way. I like to sell into strength so that way I'm able to lock in gains, not give back profits, and still hold on for the bigger move. It's kind of the way that you get to have your cake and eat it too. And I'm also, because I still have a position in this, I'm more aware of when price does pull back and gives a valid pullback opportunity to add. That's one of the tricks with this kind of stuff. So there's that. There's Tesla, and Tesla was bought right back here, right? I actually have a position in TSLL, the leveraged ETF of Tesla that I got back here and traded it for this. So long a couple of different ways in Tesla, but bottom line is that, is the trade working? Yes, it is. So there's even more profits that are in the tank. TNA, this continues to work. This broke out, pulled back, is getting support, exactly what you want to see. On. This broke out, had earnings, had a little shakeout here, and now it's up at fresh highs. LII broke out, squatted, reversed, and now it's pushing back higher. So you're seeing the kind of action, right? It's that same kind of tennis ball action that we mentioned just a few moments ago for the major indexes. So that's the kind of stuff that you want to see. So if I'm looking at these lenses again, right? Personal performance is good. So if I'm looking at the whole picture, right? Well, and we always want to take a look at this whole picture before we make decisions of, okay, do I want to be letting my winners run? Do I want to be pulling stuff in? Do I want to be betting heavy? Do I want to be betting light? Should I be adding new positions or should I not? Take all of it into account before making your decision. I've taken it all into account, and This is green for me right now, right? Market's in an uptrend. This is green too. I've got plenty of profits in the bank. As far as the system goes, the system overall is good. I would consider that to be green too. But the thing with it is that it's also what kinds of setups am I seeing right now? A lot of the setups, they're good, not great. I also want to make sure that, well, you see right here, right? I've got 6 positions on. I don't wanna, have a portfolio of 20 different stocks. I like to be fairly concentrated and trade the best of the best. That way, when I have a Tesla on, that way when I've got a Reddit on, those trades are meaningful and meaningful meaning that they could raise the equity curve. If I've got, 20, 30, 40 positions on and they're all super tiny, then sure, you could be up 100% in a stock, but is it really going to move the needle for you? No. So that's why, at least at this juncture, yes, everything's doing well, right? Everything's doing well in the portfolio. The market itself is doing well. I want to make sure that I'm patient over here so that way I could get more money into the best trades. Now, let's come back over here and answer some additional questions. All right. So, can you briefly run us through the basic methodology of your setups? That is from Minnie's Bub. Yes, I can. So pull up. Let's pull up this over here. So this is the research program, by the way. If you guys want to go and check that out, but here is the basic methodology of the setups that I trade. So I keep a whole big laundry list of the setups that I trade, and it's not really that big of a laundry list, right? Let's see how many names there are. So there's pullbacks, couple of handles, flat bases, high type flags, VCP, short stroke, bump and run is pretty rare, so that we'll leave that one off. So basically, there are 6 setups, right? 1, 2, 3, 4, 5, 6. 6 setups that I'm actively trading, that I've got detailed out in here, that I know exactly what they look like, where I'm looking for them, the depth, the length, the look and the character, some of the qualities that help take them from a good setup to a great setup. Like these things aren't required, but when I'm looking for ones that are really, really good, I've got that listed out over here. And then I have a variety of models to go and look at and be like, oh, you know what? How does I'm looking for a flat base. How does the flat base that I'm looking at today compare to this one that I traded in Donnelly Financial back here? Does it have volatility contracting? Does it have support at the 21 EMA? Is the relative strength line ahead of the price action? I want to see these things in the next flat base that I take because, well, this worked, right? And we want to do more of what works and hopefully less of what doesn't work. So if we look for what works, by default, we're going to be heading in the right direction. Now, that's not to say that a stock will have all the qualities here and then fall apart, right? Because sometimes it will, and that's why we use stop losses. But I'm willing to trade this and have 50-50 success rate, right? To have 50% of them be losers and have 50% of them be winners, because even if there's just a handful of winners that are able to do this, right? This stock was up about 50%, right? You don't need every single winner that you have to go up 50%, but if you do have at least a few of them and you have decent size, because you know exactly what you're looking for, and you're not just trading something and calling it a flat base because, oh, it moved sideways for a few days, but you know that, oh, a flat base should be at least between 10 and 15% deep. It should be 5 weeks long at a minimum. And then you start to look for some of these other qualities, then you'll be able to have a level of discernment between here's a good one and here's a bad one. Let's just trade the good ones. What other thoughts and comments and questions you guys have? I'm going to take a sip of water here. All right, Minis Bub, you're welcome. You are welcome, and welcome, Sirafak, to the live stream. All right, yeah, guys, we've got about 10 minutes left on the midweek update. So again, let me know what questions you guys have. If you're not already, if you haven't liked and subscribed to this, please do. That's one of the best things that you could do for me if you do like this show. Liking and subscribing helps take this and it pushes it out to other people so that way they're able to find it. So if you are getting value here, then please like and subscribe. And if you're not getting value here, then well, oh, what are you doing? Why are you here? I'd like to know. Let's see. Looks like we've got a couple of other comments that have come in. What do you think of McDonald's? Does this fill any of my criteria? Question from Minnie's Bub. So let's take a look at that one and turn off that banner thing. Okay, so here is McDonald's. Pull up McDonald's real quick. All right, so chances are that it does not because it is not on my universe list, but we'll go through it. All right, so one of the first things, one of the first criteria that I look for for things to pass my screens is simply this right up here where my mouse is. That's the composite rating per deep view. It's very similar. If you're familiar with Investors Business Daily, right? And well, we could pull up their website real quick. It's very similar to the composite rating over on IBD. So if you do not have deep view, if you don't have market view, you can still come here and get some of the basic ratings for free. And every now and again, I'll come over here and I'll look at IBD to get a couple of things off of this. But right off the bat, you can see that, oh, it's the 22nd stock rated in the group. It's not showing the composite rating, but it is telling us that, oh, the EPS rating, the earnings per share rating is only 69. And if you roll your mouse over here, it looks like they're given a description of what that is. So stocks are rated on a 1 to 99 scale, comparing companies' earnings per share growth with all other publicly traded companies. So it's okay, not great. Like if you brought home a 69 from school, I don't think mom and dad would be happy. At least mine weren't. and I did have a few of those. But so number one with McDonald's, it doesn't pass my screens. So it's not on my radar. As far as the technical action of this stock, well, if we zoom out a bit, we can see that it attempted to get above a point of resistance. What is that? Maybe about a month ago? Right, well, what is that? That is, close that thing. Right, back in mid-October. And since mid-October, it's sold off pretty heavy weekly volume, right? So, well, when you see a stock get sold off on this kind of volume, I like to zoom out even more and see, well, wow, this is the highest volume in a couple of years. Is it the highest volume ever? Well, not ever, but it's the highest volume going back to 2020. Right, so that's a pretty meaningful sell-off. And it closed at the low of the weekly range. So that's not something to be ignored. And so You didn't get an epic collapse yet, but price has kind of stayed around that level. And at least as far as this week is going so far, where it broke out over here above the January 2024 high when it started to get up above this, that breakout is now acting as resistance, both at the breakout level as well as that red line. That's a 10-week line. So, not a huge fan of McDonald's, at least at this point. We could take a look at Kava, which is in the same group, just reported earnings. And so far, it has had a pretty big gap up after earnings. Right now, it's trading at the day's low, but there's a lot of the day left in the day. So let's say that you're in this and you're getting this kind of price action here. Someone in our group coaching service actually just brought this up. We've got a private Discord that's part of the group coaching service. And now everybody gets to talk all day long. I'm in there too all day long. People are asking questions all day long. So it's there. It's available. You don't have to sit on Discord all day, but it's there for whenever you need it. It's like a phone a friend. But basically, the idea was, hey, you know what? If you're in this from the breakout level and you sat through this, then at one point today, you were up 21%. I like to take scale outs when I make multiples of my risk. So at this point, right, if as of today, if you got in down here at about 140 bucks and you had your stop right around support down here at the 50-day moving average, then you've made almost 3 times your money, almost 3 times your risk. So you should be taking some sort of profit off the table just to lock something in. Then, what would I do here if I'm in this? I would be looking to raise my stop to break even because price broke out already and I locked something in. And yeah, you don't want to allow a significant gain to turn into a loss. That's just a very good rule. It's a rule that O'Neill followed. It's a rule that many other market legends have followed. So, and it's a rule that I followed too. So that's what I would be doing well with Kava. Let's see. Well, what else? Minnie's Bub is asking, watching the weekly pullback. Um, are you talking about this one or for McDonald's? Well, I had a decent pullback. Well, let's take a quick look at on. We'll see if how much this pulls back. So you were talking about McDonald's, but this is another one too. That this is a leader. It had earnings. It pulled back and then reversed and closed at its highs. And this is one of the reasons why I like to make most of my trading decisions towards the end of the day. Because if I'm trying to make a sell decision on this and I see it falling after earnings and it's down here and it's like, oh man, I need to get out of this. Well, a lot can happen between the markets open and the markets close. At one point, it looked terrible. By the end of the day, it actually looks pretty strong. Weakness being bought on heavy volume. Minnie's Bub was watching McDonald's. So you're looking at McDonald's and you're looking at it being a pullback, but it not triggering yet. It's always very important to wait and be patient for your triggers, not to jump the gun. So good on you for doing that. And you're actively trading LOW. What is that? Lows? Yeah, lows. Yeah, Lowe's actually looks like the kind of pullback that I would start to get interested in. It's not on my universe list, and the reason why it's not on the universe list is because it does not pass the screens. It only has a composite rating of 29. Generally, I like to have composite ratings of 90 or better, at least to get onto the universe list. Once a stock is on my universe list, it takes a little bit more to get kicked out, but to get on, especially for a very well-established company like a Lowe's, like a McDonald's, it better have a composite rating of 90 or better. But this here, I would look for a breakout above uh, the weekly high, somewhere in the ballpark of, what is that, 277? Yeah, price could get above 277 and still hold these recent lows. That would be interesting. As far as the price action goes, the volume, I'm not thrilled with this volume. Right? You have it generally. You like to have volume declining, the not increasing as price pulls back. Right? So that's telling me that, hey, there's a lot of interest in both directions down here. That's something that could lead to chop. Um, as far as so you're using the TradingView scanner. I tried the TradingView scanner. I wasn't a huge fan of it. Um, the Brandon Shapiro, the guy that runs AMP Trading, if you could look him up on X. He's the guy that helped me develop the danger signals indicator, right? So I have this indicator that outlines all the danger signals that I look for and the ones that I talk about in the Trading Mind Wheel book. And so if a stock has, if there's things going on with the stock that could be a reason to sell, it'll highlight them, right? So this highlighted a few. It only has three, right? So from where I got in, right, which is way down here, it's telling me that, oh, there's three danger signals today. Number one, the fast stochastic cross below the slow. Okay, that's one thing. It hit a price target, and it also hit major milestone as far as R multiples go. All right, so those are three danger signals, but it's not enough to tip over the boat, right? At this point, I'm looking for a 9 or more to start to even think about exiting this one. But as far as the TradingView scanner goes, um, I'm not really a huge fan of it, but that's why I have Deep View. I think that Deep View has a much better scanner, especially for those of us that are trading growth stocks. Um, but I'd still like to keep TradingView for stuff like this with these specialized indicators that I have. The charts themselves are very similar. Any other questions? We're a little low past the halfway mark. For those of you that have stuck around to the end, thank you for being here. If you're not already on our free newsletter, we put out this newsletter. I try to do it every day. It ends up being more like every other day, but it's jam-packed with loads of free education. Every now and again, we'll do a trade walkthrough in there where I'm telling you, well, here's what I saw when I was buying it. Here's what my plan has been, and where we're picking apart the stock in that way. A lot of general education too, a lot of mindset stuff. And it's meant to be digestible because I know you guys. You guys are busy. You don't have a ton of time to sit here and read an email that's 10 miles long. So bite-sized chunks, and that's what you get in the newsletter. So if you're not already on the newsletter, go check it out. marwolf.com/newsletter. All righty. And I think that is about it for today. So thank you all so much for being here. It's always a pleasure. It's always a lot of fun. And I will see you on the Traders Mind Chat show. That's the next live stream that we've got coming up. We have that on Friday at 11 a.m. Eastern Standard Time. I'll see you there. Take care. Much love. God bless.